In this video, traders, we are going to look at golden rules for trading breakouts on a 1 minute chart. Some of you scalpers out there, stay tuned. Hey guys, warm welcome to you. Thank you for joining me. Okay, so scalping pretty popular out there, and even trading breakouts. Listen, if you're not a scalper, very often you're drilling down onto the time frames to try to fine tune that entry using a bit of price action, using a tape read to say, hey, listen, if I can get a breakout on this, maybe I can use a scalpers type stop. Maybe I can look for a multi-hour, multi-day trade even. You know, guys who are using scalpers entry, swing traders exits, works quite nicely. So this is my golden rules. Again, it's just my take on it. You want to stick your comments in the comment section below, guys, please feel free. Always interested to hear what you guys have got to say. But this is the kind of thing that I look for if I'm trading a breakout. Now, let's just qualify what we're talking about when we're trading a breakout. In an ideal world, I prefer to be pre-positioned for a breakout. Just my preference. I prefer to either be, let's imagine this was the chart we're trading. I prefer to try to preempt a break before we get the break. So in other words, maybe I'm buying this pullback, maybe I bought a low at the bottom and I'm holding for the break, and I might sell some into the break. However, there are times when, you know, you might get a full reversal, goes through highs. You might get all sorts of times when you need to be trading a breakout. Now, when we're buying this breakout, the classical thing for people to generally do is to buy on a break of that. Now, the problem you've got with that is that you sometimes get an awful fill, especially if you're trading volatile markets, volatile currency pairs, or the DAX or something like that. You sometimes get a really awful fill because by the time your order hits the exchange or hits the broker or whatever, plenty of people have been in before you, end up buying at the peak of this breakout. The slightly better way of doing it, again, personal preference, some people may have perfect success with that, is to wait for a little bit of a pause, because very often you get the break, you get a bit of a pause, then you get the real true breakout. Don't forget, guys, we're on a 1 minute chart here, so 1 minute, or not even a minute, because a full candle could be a few seconds. Yes, you're not getting right at the beginning of it, but just waiting for a little pause, we'll talk about duration in a second, then can yield, you know, multiple hours or multiple minutes or whatever we're looking at, proper breakout, as in, you know, a real decent strong move. And of course, you've always got to quantify your risk and have a stop in place with the breakouts, because most of the time breakouts are fake outs, in fact. But let's not go through and look at kind of some of the precursors for breakouts. I want to stick to the golden rules for trading the breakout. So number one, price should hold for 2 minutes, 2 to 3 minutes, I'll say. What do I mean by that? So imagine this is our chart here, we pull back and that was our level we wanted to trade a breakout of. Zooming into the pattern here, this is what we're seeing. We see the breakout through 2 minutes of kind of consolidation, and then on bar 3, I want to see now price continue. 4 is a bit too much. I mean, listen guys, this is a general rule. It's going to depend on market conditions. Obviously, the currency pair you're trading, the index you're trading, the underlying asset you're trading, all are different. However, for me, a nice strong breakout has the strength, goes through, rallies, holds, pauses. It's a pause more than a pullback for a couple of minutes, and then minute 3, maybe minute 4. Obviously, you know, let's not be too definite here because it depends when this breaks. If it's the breaks in 50 seconds of the candle, 10-second break immediately, it's like on the next candle. So, you know, it could be plus or minus almost a minute there, can't it? So 2 to 3 minutes, then I want to see a continuation. If it doesn't, then you want to make a decision. Are you cutting it? Are you tightening stops up? To me, I'm really kind of tightening my stop up, especially if I'm trading a pure momentum play. There might be times when you want to have a lower stop and you're playing for higher targets, etc., etc. But if we're talking about pure momentum breakout, if the momentum doesn't continue pretty quickly, 2 to 3 minutes, I don't really like it. All right, next one, number 2, guys, is price should stay above 50% of the breakout level. What do I mean by that? So imagine this is our breakout level, our resistance, our gap, whatever it may be, pushes through, then we just literally want 50% of that range of the breakout of that candle. Use your fib tool, 50% or whatever, use it by eyeball. So say if this was a 50 pip breakout, a lot for a 1 minute bar, but say it was, then the 50% is going to be 25 pips, simple as that. And what you don't want is for price to come back and start incursing into this 50% level. Should stay above the 50% level. True breakout should be holding high, a couple of pause, and then go again. So that's another golden rule of mine. And number 3, guys, is volume gains during the breakout, declines during the pause. This is an added one. Really, these two are the kind of ones that I'm very strict on. because that's pure more a price action thing. But you've also got the situation where volume should be strong in the breakout. Most of the time, if it's going to do that and it's breaking through, you are going to get that strong bar on the volume, right? We know that. If you trade breakouts, you know that exactly that's what happens. But then what we should get really is smaller kind of volume, not maybe that order of magnitude, but we don't really want solid volume there. Now, I'm going to kind of say, hey, you can be flexible with this, because very often you might get a good strong volume and then you get good volume still, a lot of selling pressure, but a buyer's just holding on the order book. If you were to look at the order book, it might be just holding. It just soaks up all that selling pressure and then it steps up again. So it's not always the case. This is why I'm a little bit flexible with it, but most of the time you like to see strength, good volume, retracement, slower volume, lower volume, should I say, and then as it starts to pick up again through that level, another expansion in volume, because volume indicating urgency, lower buyers stepping in, the supply demand imbalance is really out of sync, and that's what you're looking for. So those are my golden rules, guys. Let me know your thoughts on that. If you like this kind of stuff, thumbs up is appreciated. We can do more of this kind of things. If you're into your trading, you love your trading, make sure you're subscribed to this channel. This is the place that you want to be when we talk about trading, mindset, strategy, discipline, everything and anything to do with trading the markets. Take care, keep your risk managed, and I'll see you in the next one. Bye-bye.